Hello, friends. Welcome to Nirmal. I'm Piyush Jain, and today we are going to put the focus on an exciting company. It's bringing its IPO. This is an IPO review, and the sector that we're talking about is electrical lighting. All we know, this sector is all about creating brands. It's a large consumption market in India. In fact, you can actually also talk about a global market. But all companies which actually have come into the stock markets, created brands, they then actually have gone and created huge wealth for the shareholders. So something exciting to look forward to. Let's now understand the company, IKIO Lighting Limited. And for understanding that, let me now welcome the management, Mr. Hardeep Singh, the managing director, and Mr. Sanjeev Singh, the director of the company. Gentlemen, welcome to the show.
Thank you. Thank you for having us.
Now, let's first start from the business model perspective. What's the uniqueness for this company? Is it about the manufacturing capability? Is it about the customization capability, design capability? Help us understand how we should really visualize from a business model perspective.
So it's actually a mix of all the things that you mentioned. It's basically a fully backward integrated manufacturing capability that we have. Plus, it's the mix of the different verticals that we have. I mean, the kind of products that we are doing, the kind of markets that we are catering to. For example, we have the ODM business where we are manufacturing high-end home decorative lights for Philips Signify. Then there are different verticals apart from this, but all of them are all B2B and again ODM. So, like for example, we are doing products for the commercial refrigerators like LED bars, drivers. Then there are a whole host of other electronic products, the IP stabilizer and other products within this category. Then we have the export unit, where we are exporting products to the US market. For example, we are catering to the RV, the recreational vehicles industry. There we have a whole host of products, again, a wide array of products that we are doing for that segment. Then some industrial products that we are doing, again, for the US market. And then some lighting products for the in-store retail lighting in India. So all B2B, all ODM, fully backward, with full backward integration, designing capabilities. So I think a mix of everything is our strength.
Right, and when I was hearing you, there are numerous questions that started popping out because it sounds exciting. Because when you say refrigerator, consumer durables like the refrigeration is something which is in huge demand across pan India. Then you're talking about a sort of new retail stores, again lighting for that, and we know basically it's such a sort of large demand. Now the question really is basically how much stickier this demand is for you, or are there a set of large clients who actually are giving work for you? Like what how the sort of work really happens here?
So again, it's like it depends from vertical to vertical. Every vertical, like I mentioned, the Philips ODM division. Then apart from that, the different verticals. Every vertical we have multiple clients, and we have a proper outlook of where the business is going to move in the next year or so. So we have proper understanding and planning from all these different customers, and in certain units we have more than 100 customers where we are catering to. So it's again a wide array of products plus a wide array of customers also we are contributing to.
So our USP is like for all the like segments which we described, we are like our basic raw materials are same. Like we are buying the aluminium for those all the fixtures. We are buying the plastic for all the fixtures. Then doing the injection molding, CNC cutting, powder coating. Then making the drivers, designing the drivers. So it is a combination of all, but the trees branches are different. So this is our USP. So anybody like I'll tell you that how we are different from others, because if you have to have all this kind of backward integration, you need to have more volumes or the more diversity. Here what we are doing, we are not clashing with our even with each of our things, and all the branches are doing their best, and we can foresee the what we are doing in the previous years. we will do the same.
Right, sir. And I'm tempted to now actually take a sort of deep dive into the integration here and backend integration. What is the sort of type of raw material we would say like that is required for you to sort of generating the margins which you are doing, and how much sort of as I was doing some study, almost half of it actually is imported. But what is the nature of raw materials which are required?
So actually, there are, you can classify it into three different types of raw materials for, an easier understanding. One is the aluminium part, which is required for the housings and casings and all, the fixtures that we manufacture. Then the plastic, certain products, certain components are made from injection molding or extrusion. So all of that also we are doing in-house, the injection molding and extrusion, co-extrusion processes. Then the third is the electronics. So all the electronic components, we source all the electronic components, and then we manufacture and design the drivers also in-house. So like you said, the 50% of imports, around 50% of imports are, I mean, we rely on imports. The reason for that is because all these electronic components and LED diodes, they're not actually manufactured in India. So we have to anyways rely on imports. But in the recent past, what we have done is, initially, I would say maybe 4 or 5 years back, we were also importing the casings and fixtures and everything. But now, since, a few years, we are doing all of that also in-house. So this is, I would say, in a broader sense, the different types of raw materials that we use.
Okay, that's interesting. You have almost about 4 factories, sir, right?
Exactly.
Right. And what is the sort of capacity utilization we are operating right now in these factories?
So, again, capacity utilization, it's a very tricky subject, because the way we manufacture the products, we are not doing commodity products where we are manufacturing, let's say, a bulb or a tube light in, lakhs of pieces a month. Our business strategy is completely different. We are doing customization at a scale.
Right.
So, one single factory is handling more than 500, 600 odd SKUs. So you can imagine, manufacturing those 500, 600 products within a span of 30 days. So again, capacity utilization works in different ways, because there are different processes that are there in manufacturing. Some are automated processes where the capacity utilization is generally low, but because our SKUs are so many that, there are constant changes in the line. So that ways, it is not getting fully utilized, but there is, a capacity there. But if I talk of the FA lines, the packing lines, there the capacity utilization is on higher size as compared to the automation. So every vertical, every process, has a different percentage to that. But on a general sense, I can say that it's somewhere close to around 70%. But then again, it's, in bits and pieces, so cannot really come out to a single number.
So that is why we are going to enhance our the capex what we are going to get. We are putting up a new unit in Noida, where we are going to have the ultra modern facilities, world class. So our mission is to make made in India products better than the other parts of the world. So, and the cost effective and the delivery on time. So three major area we focus: pricing, quality, and delivery. So what in each of the segment we are achieving our goals only because of that.
Right. And the growth has been very strong over the last again couple of years. I was taking a look into the historical revenue. I'll talk more about this new facility. Let's now put the focus on some of the numbers for our viewers. Uh, the initial public offer that basically is opening on 6th of June and is going to remain open till June 8th. So the price band basically is 272 to 285. Also, the retail portion is around 35% of the net issue. We're talking about issue size of around a tad more than 600 CR. And what basically is coming out that around 350 crores is getting raised as fresh issue of shares. And I think this is something now actually we're going to ask the management here. About 250 crores is actually what I was figuring out for the new facility in Noida, which we're just talking about, and the remaining for debt reduction here. 250 crores, is that the sort of right ballpark number, sir?
So yeah, it's around 235 crores what we have planned, for capex. So in that also we have divided it into certain segments. Out of that 235, around 105 crores is going to go for the infrastructure. The three manufacturing state of the towers that we have planned, out of which the first one, the building itself is ready. So this is going to go into the infrastructure, and another 98 crores is what we have planned for the plant and machinery. And in that 98 crores also we have how much we'll be spending on the fixture side of things, to room, how much in the driver side, and then there are expansion plans for a couple of product lines. So that also is pretty well stated in the document, how we'll be utilizing that. And like you rightly mentioned, around 50 crores is what we'll utilize for debt repayment. So this basically sort of sums up how we'll be utilizing the funds.
And what's the sort of total net debt or we are working with right now?
So the total net debt that we are working on right now, I mean, if I talk of the absolute value, it is close to around 130 odd crores. And again, like I mentioned, 50 is what we will be paying off, and remaining majority of that is going to be in the working capital. And that, for banking relation and purpose, we will keep certain
Normal
amount.
Yeah,
Yeah.
normal part. And in fact, it will grow only because as the revenue will keep growing, the working capital requirement grows. So it's normal part. So which implies that should be a good news for our viewers, because the balance sheet will be nimble. From the perspective of asset turnover, is it a right estimate to really think about 5 to 6 times as an asset turnover on any sort of new facility? So if 250 or 235 CR, if we are spending on a new manufacturing facility, would that be a right assumption that at particular period of time, as the facility matures, we are talking about easily sort of generating more than 1,000 crore revenue from the facility?
Actually, it's we cannot really give out any. We cannot comment on the future number, so that we have
No, no,
kind of restricted on
no
that.
position. I'm
But
just asking on a rough turnover basis, asset turnover.
y-
What's the average
yeah, so the
asset
asset
turnover for
turnover
the facility?
previously, yeah. So the asset turnover previously, like you mentioned, it's in the range of 5 to 6 times, and that will continue to be there. But obviously, after the capex, it will take a while for us to reach that level. Once the capacity utilization, reaches where we are currently at, or probably a little even lower than where we are, it will again be in that tune. But we already have a entire plan laid out, but I'm sadly I cannot comment on how
No, no,
or when that
it's
is going to
completely
happen.
fine. That's the sort of safety regulations. Everybody knows it.
Yeah.
But I think that is something a useful information for our viewers, that this is a new capacity, and our viewers should really actually put their focus on how basically this new capacity keeps panning out, because the revenue trigger is clearly actually seen there. Apart from that,
Uh,
let's also talk about how the sort of market looking to you from the perspective of retail market, because a lot of growth is coming up from there, new retail stores. There are a lot of brands entering into India. The domestic brands are also actually spending a lot of time in expanding across geographies. And luckily, it's a huge country and huge population. So the demand actually just keeps going. What is sort of demand looking to you right now?
I mean, like you mentioned, for the in-store retail lighting, not just that. If I talk of all the different verticals, all of our verticals, if you look at the recent history in the past couple of years, the kind of growth that we have seen, in all these verticals, that momentum is going to continue. And like you mentioned, the retail industry is also booming post-COVID. So that momentum will continue for at least the next, we are assuming that momentum is going to be there for the next few years. And on top of that, it's more of a repeat business. So that is something that we are also very excited about. But again, I would like to mention all of our verticals are doing a very good business, and we are seeing very strong growth in some of the even the new verticals that we have.
and that is why we a major capex we are putting up to upgrade our backward integration as well as R&D and your like construction and all. So we are putting all the emphasis that we should be ready for the big boom, which we are already foreseeing.
I would assume that right now, because your own organic momentum is strong, 20% plus growth, inorganic acquisition, that would not be part of the plan right now, right?
Our most of our verticals, are fairly 4 to 5 or 6 years old. So we are focusing on our current verticals where we are seeing very strong growth, and that is where we are. Our focus as of now is so.
Right. I think for our viewers, because for them it will be a very new concept to understand from the perspective of the US markets. So help us, give us some information on how this new US opportunity is shaping up for you, how much it is in size compared to what you have been doing in the Indian markets.
So this is actually everyone in USA is looking for China one. So we are taking it because we have like backward integration and development in house, and we develop so fast, and the commitments we honor. So they are looking as if they are big suppliers. So we are in touch with all the big companies of the segments which we are doing. So we are getting very good response from them. And because the most important for USA market is the certification and the timeline. So we have already crossed that, and we got almost you can say 20 to 25 products already certified by the US
Great.
labs. Yeah.
Great. And will that also imply maybe if you're able to do the same in US, I'm just right now, I know it's very early stage, but a same sort of approach will happen for Europe also. Maybe some years down the line. But is it something which you think is possible?
Maybe US, Europe is there, Australia is there, and Middle East is there. So the volumes are huge. But that is why we are focusing first to develop our base unit. So any surge comes, we can get up to that.
Absolutely, absolutely. Sounds really good and sort of interesting. Perhaps towards my last questions, from the perspective of last year, because last year has been really volatile for everybody, whosoever has been managing their raw material purchases. What has last year actually really taught you or told you in terms of sort of managing your global purchase portfolio?
So actually, we were, I would say, fortunate enough that all of our business models, product lines, and business verticals, we are doing ODM. So, like you rightly mentioned, there was a lot of hue and cry about components being, imported, and the lead times they went crazy. Like from a 4 to 6 week lead time for a generic part, it went as high as 1 to 2 years. So what COVID has taught us is, not to rely on single design, single sources. And I think, we were one of the very few companies during in electronics and during COVID who've actually sort of sustained or grown. So if you look at some of our verticals, they've actually grown also during COVID. That was only because of our strength that we were able to, adapt to the evolving circumstances and make new designs and immediately bring out those designs in the market and made sure that the production lines didn't stop. So now what we've learned and what we will continue going forward is that we'll have multiple designs for a single product. I'm talking of electronics, so we'll have multiple designs, we'll have multiple sources, and we've already created those during COVID, and we'll continue to have that for our newer products also going forward.
Right, sir. I think it sounds good. This field is all about sort of a branding, and then also about offering branded solutions, and that's why again the margins always has remained healthy for most of the listed companies operating in this space. So perhaps it will hold true for you also, and perhaps will extend wishes towards that, towards a successful IPO, and then also eventually towards creating even a much bigger brand, because that's how the journey of all the listed stocks has been. So from our side, all the wishes, and thanks a lot, sir, for coming on our show.
Thank you very much.
Thank you so much.
very much.
Thank
Thank you so much.
And with that, viewers, this was an interesting company. It's coming in a space which is really operated by a lot of brands. So perhaps something which I hope that you enjoyed this conversation. For now, it's a wrap.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.